All right, it's 6:33 p.m. July 13, 2023. It's a Thursday, so we do an end of day review for today. So today is Thursday, right? So it's a day right after the CBI released yesterday, which is Wednesday, and it's positive news, so it go up. So look at the 5 minutes time frame. We can see that the DR model is really that's from yesterday, right? After the new release, 8:30 Wednesday, it going up, and it retests this fair value gap, and it continued to stay up. And you see that the London section today, right? It take out the high, and we thought that gonna be go low, but it did not, it did not go lower. But here we can see this is a order block right there. Well, you can see this order block, go up, fair value gap, retest. So we can use this as a setup. Well, we don't see that this morning when we do the pre-market analysis, so that's the reason why we have the trouble right there. We don't see that. Yeah, let me make this one what color is this one? Rectangle color, more color. I wanted to make this transparent. Yes, so we can see that. Wow, we don't see that. This is a retest right there at 8:35 today, and it's another retest on 9:30. You see, it retests on where, on what? On a well, we can see this in order block, right? You can view this order block, or the whole thing right is order block. But we can see the value gap right here, and you can see this order block right there, fair value gap. Yeah, a lot of set up for long. I don't know, for some reason we are bearish. I mean, I see it's bearish. So that is the lesson learned for us. The reason why it's bearish, because here's what I come up with the bearish. This one I say, wow, because it keep going up, so it have to be going down. That's the lesson learned for us, right there for us. 1 2 3 4 5 6 7 8 9 10 11 12 13, right? 13. And this morning we count, we said, wow, it's impossible to keep going up. So that's the lesson learned for us. It's nothing, everything is possible, because we think that market will go down. That's what we think. And we reject our thinking into the market, which is a wrong approach. Market does not care what we are thinking, because we have no control on the market. So that's a lesson learned for it right there. So we have to look for that setup. That's it. We have to remove the ego, which is we want to get it right. Or we're afraid to be wrong. That's the thing that we have to work on, and remove the ego, or remove the so-called emotion. We have to detach ourselves from the emotion, so we don't have to worry about right or wrong. We have to be clearly subconscious about that, so we can go with the flow. We go with the market's movement, instead of force our bias, confirmation bias on the market. Well, if we go with the market flow, we can easily identify the bullet setup right here, right? Order block, fair gap for the run-on session, retest that order block and going up the same right here. And then we can see, I mean, the whole thing right here is very tight consolidation right there. And we see that it break through that and it go back here. It felt like it going down, but it's not. It's not a retest the fair value, I mean the order block, and it's going up right there. So the time about 110 right there. We did enter entry a short trade right here. The reason we do short right here, but it's turned out we enter short right here because here what we see at the real time at that moment, right? We see that it created equal high right here. This is the order block, so it is a retest that order block. So we thought that we are entry, but the lesson learned for us that there's no fellow gap around here. Do you see any fellow gap? Okay, let's look carefully. If we see any fellow gap after this order block, no, we don't see it. I mean, let's turn on the fellow gap anyway, right? So purple. See any fellow gap? Yes, you see, there's no fair value gap on the downside, which is a very fair gap. They all after this, right? We only have fair gap right here. So if the right entry to it has to be this entry, we'll create fair gap right there. And then the target force has to be a sell liquidity here, right there. So you see there's no follow gap around when we try to entry. So that's the lesson for it. The fellow create after we entry. That means we enter here early. The right entry has to be this. But as soon that you see the rejection right there, right, and the big down here, and then it move up right away, then you have to get out. So it's a good lesson learned for us right there. Is that what it comes down to, right? So here's the note we take for the trade. Oh, let's open that document again. So right here, what we are doing. So we took one trade phrase, we break even, so and profit loss. So we take one trade. The trade we set up is order block. Actually, there's no fellow gap. I mean, fellow gap right there, but we entered early. But another thing, detail in there is the equal high retest short setup. We entry at 10:13. So this is the right, I would say the best entry is as 10:16. Yeah, wait for that. Yeah, the reason we take a short trade because we say that we already mentioned that on the 4-hour time frame, the upclose candle, 15 upload candle in a row. That's our and buy sell liquidity were taken, right? Because it keep going up, so we take buy sell liquidity. That's our rationale when we take that. And that trade will be considered successfully trade or winning trade if our target only 50 cents, and it should be met. But our target $1 move. And sure, this is a lesson for us, right? We should wait for the fair value gap for further to form. Okay. be patient for us to form. The same idea right there. Be patient. Okay, we don't see the failure gap, we just jump in. So look at 5 minutes, we can see, yeah, we look at 1 minute right there. On 1 minute. But when we look at the 5 minutes, we see that is consolation and there's no clean setup. We should not engage. We have to wait. And when we wait, we can see that the short bias is not correct. Should we go long? So as a lesson learned for us right there. But we are in the trade, we can see some, some sign right there. Something is not going right. That's the reason why we move to break even right away. So that's a right decision for us right there. So we should say right here that we make a right decision to move the stop loss to break even after seeing the price fell to go down. We did see that. So we jump out. I mean we're going to get out of trade. What else we want to say in here is a lesson learned for us. Oh, did we take this trade? I mean, and also yeah, I don't see the, when I take that trade, we haven't defined the target, and that's our lesson learned for it right there. And I did feel fear missing out, so we just put right here. So, as we are checking the tray, we feel we did have a FOMO, so we have to eliminate that. When we trade, we have to feel completely peace. We don't feel like fear missing out. So that's the thing that we need to improve, and that's the signal for us that we should not engage. Did not have a target redefined, so that's the lesson learned for us. So we just no judgment right here. We just describe what goes through our mind when we take that trade. Okay, so that's one trade we take this week. But tomorrow we're not going to take any trade. So we're done for this week. So take a look how it's moving. So for the DR model, how it worked today. Look at that. Wow. So for the DR model, it reached back right there. Let me turn off do not show trade, uncheck them. So the DR model work and look perfectly. You see it's a retirement setup right there again. go down to the bottom and go up all the way. Wow. You know how many standard deviation it read right here? Wow, if we trade on the DR model, we have a huge run for us right there. Retracement. How we do that? I think from here to here. Wow. How many standard we have? Or more than 2 standard deviation move right there. You see? Wow. That's amazing. So we have to put the note in here that DR model is working today, and what is 2 standard up move. Beautiful. And also it is a retirement setup right there. When you have a huge move right there from the low all the way up, that retirement, the same for the other way around, from the top and then go all the way down to center vision. That's amazing. Wow, so the DR model is worked wonderful today right there. How do we identify the DR model right here? You see, we don't see. You see, we only have feather gap upside. That gives you a huge signal right there. I mean, you can trick this at a what? A bullish breaker, and it's fair value gap, retest the bullish breaker again and go up. Wow, that's a good right there. Ooh, so nice. Yeah. Oh man, entry at 11:30, perfect. Oh, that's beautiful setup. We learned that setup today. Beautiful. Next time we can apply when we are thinking clear, remove our emotion, our ego, attachment, just, you know, go with the market flow and see the thing we're supposed to see instead of, you know, force ourselves on the markets. What you call that? Breaker, fair value gap. Give a clear signal. There's no fair value gap, then don't sort. Where we sort in here, right? That's our lessons learned for it right there. Retest. And remember, the breaker and fair value gaps always have a strong and high probability setup right there. Long setup. Beautiful. Wow, beautiful. Entry time 11:30. You believe that? So beautiful. And bullet breaker is at 9:30. Can you believe that? And it's all of that is in a time of entry right there for us right there. What are targets? We can do targets, $1 move, or one standard deviation, or axis time gonna be 15:45 right there. Around there. What's beautiful setup. We learn it. We are becoming a better trader today, better trader today than yesterday. We have to give ourselves room to learn. There's no frustration, no blaming, right? Every day is a journey, right? Every day is new thing to learn. We learn and let ourselves to become better. No frustration, always remain positive. We are becoming. We do every day we do the best that we can and learn from that and be grateful that we have opportunity to learn. That's our mindset right there. We create our own wealth. We're not gonna compete with anyone. We are on our own journey. We're not in the competitive mindset. We are in a creative mindset. That's the reason why we will not let the ego control it. We don't demand the results. We are stick into the process. We are patient. That's who we are, and we are becoming. Every day we're becoming closer. We have to follow the process. We have to be thankful every day. At the end of the day, right, we're thankful for opportunities that the market show us what we have seen before, and we learn that. We put that into our brain, into our identity, our character, that we are patient, and patient pay off. Remove any attachment, emotional attachment, so we can see the market the way it's supposed to be seen. All right, let's do it. Another thing I want to bring out is that today is the day after CPI. So what do you think? I mean that so-called a second day player, we can apply the strategy called second day player, which is I think the S&P Capital. They the one who come up with this concept, and I did read their book. The concept of second day play is that there are huge move after the first day. Then the second day gives you the clue how the market gonna move in the second day. Right? So we can see that right here, the second day it retests. It will not go below that. It retests the bullish breaker right here. It just retest them and keep going up. Then we can engage long. Yeah. So we should put the note in here. I mean, the beautiful right here, right? Let's see if we look at the 15-minute time frame. Let's put the note into our journal. Command right here. So we should apply. We should have, right? Apply so-called second day player. This is the S&P strategy, right? And go bullish instead of of being bearish, right? I mean, look at the higher time frame. We can see this setup better, right? Look at a 15 minutes time frame. I mean, we ought to see that on the 1 hour time frame. I mean, 4 hour time frame. I see it. I will show after we see that. So you see. So the second day, look at the huge move upside, right? Go back, retest this, bullish breaker right there, and keep going up. And you see the another bullish breaker right here. You see, wow, it's retest exactly right there. You see that? Bullish breaker, wow. Fair value gap, retest. That's bullish breaker one more time. Or at least the fair value gap. It retest at 9:30. Man, retest. Yeah, fair value gap right there. Wow, you see that? You see that? Oh man, fair value gap. Ooh, what time is this one? 10:30. Can you believe that? Oh man, let's do this off there. Oh, that's coincidence, huh? Coincidence, huh? Okay, let's see. See this bullet breaker? Beautiful right there, my friend. And you see bullet breaker, breakthrough, value gap, and retest them. So our entry should be, let's remove this one real quick. It's kind of hard to see it right now. You see right there? Wow. 10.50. Wow, 10.50. Take note. And we want the bottom, okay? Man, so clear. So that's the perfect of second day player right there. So we see that it's a second day player, right? Because it will not break the bullish breaker, then it will go up and will enter long right there. However, if we see the setup is go down here and it, let's say there's a bearish breaker right here, it go down, right, create value gap. Let's say if the setup for the second day for the bearish is going to be like this one is bullish, right? So it come down. Oh no. So come down from here. Let's say it open. It go down, right? Create the value up among here, and it go up and it retest again. Then it start going down. So that's it, the bearish for it. However, it's bullish for it right there. So it's what, it go up, check by liquidity, and retest this great value up, retest right there, or retracement, and it gone up. Yep. Wow, that's a second day play for us. Okay, let's take a note right here, my friend. Let's take a screenshot right here real quick. Beautiful, we learned a lot today. what we're gonna do right here, we're gonna say second day play, and we give the credit to SMB, the second one. And in this case, it confluent with our setup with a bullish breaker, fair gap, retest, and it can be a long setup first, right? The entry time 10:15. Okay. That's it. It's just so simple like that. What else you want to say? Beautiful right there. You can say right here. Bullish breaker at 10:30 yesterday, Wednesday, and then we have fair value gap. What fair value gap form at what time? Fair value gap right there. How about this one, which is for the bearish scenario, right? Second day play for, you know, short setup. Right there. Yep. So second day later. Okay, we should wrap it up just real quick. Just look at the 4-hour time frame, so we can see right here, right? So another signal for QC is at 9 yesterday candle. As soon as you see this candle, go in and retest the candle, and then keep going up, then you know it's the bullish right there. So that can give us the signal for the second day play right here. So this is the high of the day, and it's retest that high just a little bit for retracement and then go up. So that's the bullish signal for it. However, if we see that it open low below this candle, it's the key candle first right there, and go up a little bit to retest and go down right there. So pay attention to this candle or second day play right there. Yeah. Second day, yeah. SMB long setup. Inside Pona increase, which is a bullish breaker at 09. That's a contradict right there. So give us some idea right there. No, don't do this one. This is for the short setup. We can do right here. Secondary letter S and B. Short setup. All right, I think that's good for the end of day review today. Thank you for watching and talk to you later. Bye for now.